to stick with retail for a moment, because we've been talking a lot about it. You don't like food retail much, do you?
No, it's it's far too grim. I mean, I have to admit, I look at my own consumer habits, and I have stopped going to the very big supermarkets or hypermarkets for really quite some time, because I find them just too challenging. They take too long to get round. There are too many, there's too much choice. And I think what retailers are finally getting their heads around is that we don't need that much choice. In fact, what we want is convenience. We want to get in and out quickly, and anything that helps us do that is much better for the consumer, but not necessarily good for the retailer.
But you like online retailers. There's a lot of choice there. I can easily get lost on a website.
That's true, but there is productivity. Let's be honest, Anna. If you're a naughty person, I'm sure you're not, you can do that during your work. You can go online to Ocado and order your groceries for the evening.
Now, I think that's hurting UK productivity, Edmund.
You might argue that, but, you know, we all know that service sector productivity is incredibly difficult to measure anyway, and so that just gets lost in the morass. But my point is that that is where retail is moving, and that, of course, presents challenges, greater and greater challenges for the classic bricks-and-mortar retailers.
You have a book called The Idle Investor. Have you been idle whilst the whole Greece situation has been burning, Edmund? Has this presented opportunities for you, or have you been sitting out?
I've actually, talking about the Eurozone, bizarrely enough, it has been sitting it out, because obviously I invest, you know, it's my book, and I invest in the system. I believe in it, so I stick my own money in it. And funnily enough, over the last month, what the system in the book said, the third system, called it's a monthly trending system, said, sit it out. Sit out the Eurozone. So I remained invested in the US, funnily enough in the UK as well, but in the Eurozone it said, no. The month of June, sit it out, Edmund, and wait. And I think now we are at a very interesting turning point. My basic message, would be, forget about Greece and buy Europe anyway, because I think it represents great value right now after the pullback that we've had. Secondly, we know that European growth is going to accelerate through the rest of this year, like the US. And thirdly, there is a huge potential for corporate profitability to grow. Now, if you look at Ahold and Delhaize, what are they? Two huge food retailers, massive in America, big in the Benelux as well. There's massive overlap. What are they going to do? They are going to strip out cost. And what will that do to profitability? It will raise profitability. And there are plenty of opportunities across European companies to see that happening more and more.
So 2015 is already shaping up to be quite a bumper year for M&A. Is that a thing that you're going to be investing around even more then?
I am. Because I think it's massive. I mean, if we look at the healthcare sector, it's a sector I like anyway for long-term growth reasons. If you look within that at the big biotech companies, they are cheap. And then the final element of the puzzle is you are seeing M&A in areas like generic drugs, with companies like Mylan, Perrigo, Teva. They're all consolidating, and again, that will improve productivity, that will improve, actually, profit growth for that sector, and so I think M&A is a fantastic place. Technology will be the other area I would really, really focus on, because we see in the semiconductor space a lot of M&A activity, a lot of big taking over mid-size, so I'm positioned in the mid-size, hoping to get taken out.
Are we going to hear a lot from corporates on both sides of the Atlantic, perhaps, about the challenges of a volatile foreign exchange market in this earnings season? Is that something to prepare ourselves for, Edmund?
Well, I mean, the Americans will certainly say that, because certainly that's the mantra we heard in Q1. We will hear the mantra repeated in Q2 for sure. But I think, again, as an investor, you should look beyond Q2. You should not be focusing so much on quarterly earnings. Honestly, what a company does from 3 months to the next should not be what is driving you for the long term. You should be focusing on a long-term picture. The longer-term picture for the US is that we will see the drag from the strong dollar abating. We will see stronger US domestic growth pick up.
Okay.
Things like loans, mortgages, you know, housing demand is picking up really quite sharply. And all of that will feed through by Q3.